Now pay attention. When we do the allowance method, we have to do what's called an aging of our accounts receivable. I'll repeat that while you write it down. When we use the allowance method under GAAP, we have to do what's called first an aging of the accounts receivable. Now, what does that aging of accounts receivable give us? Write this down. The aging of accounts receivable will give us a predetermined ending balance in the allowance account. I'll repeat that. By doing an aging of accounts receivable, we are going to arrive at a number, and that number is going to represent the ending balance in the allowance for bad debt, or the allowance for uncollectible accounts, or the allowance for doubtful accounts. Three names, same account. The allowance for bad debt, the allowance for uncollectible accounts, the allowance for doubtful accounts. Same name, different terms. When we do the aging, by doing the aging and calculating the aging of the accounts receivable, it's going to give us the predetermined ending balance in the allowance account. That's very important when you use the allowance method. Do the aging, get the ending balance in the allowance account. Now, is that ending balance in the allowance account going to be a debit balance or a credit balance? You're right. It's going to be a credit balance. Why? Why is it a credit balance? It's a credit balance because it's a contra asset. What is the normal balance for an asset? You remember that in chapter 3 and in chapter 4 when we discussed it. Your little hint box, your little cheat sheet. The normal balance for an asset is a debit. Therefore, to reduce an asset, you do what? Credit it. The allowance for doubtful account, being a contra asset, will have a credit ending balance. Let's look at an aging. The aging account basically says, let me look at accounts receivable. In this problem, the accounts receivable at the end of X1 under the control account was $89,000, and at the end of X2 under the control account was $129,000. These are the control account ending balances in accounts receivable in X1 and in X2. Same number here. And what we've done is taking the account receivable in X1 and X2, and we broke it into the number of days outstanding. We basically say, here's what's current of that 89 and 129. Here is an amount that's 1 to 30 days overdue. That means it's 31 or more days overdue. 1 to 30 days overdue, right? So current accounts will be up to 30. This will be from 1 to 30 days overdue. All right, beyond that 30. Then we got from 31 to 60 days overdue. Then we got 61 to 90 days overdue. And then we have more than 90 days overdue. So all we did was layer our accounts receivable into past due amounts. Current, 1 to 30 days past due, 31 to 60 days past due, 61 to 90 days past due, and then over 90 days past due. All we did was take the amount of accounts receivable and break them into the amount of days past due. Very important. Very important step when you do an aging of accounts receivable. Now, we get into the experience rate. Once we broke it down into the layered phases, we then, based on experience, like I did in my example on the board, 2%, we say, based on our experience, 1% of those current accounts we won't collect. In my example, it was 2%. 1 to 30 days, 5%. 31 to 60 days, 10%. 61 to 90 days, 20%. Over 90 days, 40%. So guess what? what we're going to do is take these layers and multiply them respectively by percentages. In year 1 and year 2, the same percentage. By doing that, we're going to calculate in the aggregate, once we add them all together, because this times 1% will be 500. And then we go further, and we add them all up, and we get the total of the amount that is deemed uncollectible. That number becomes the ending balance in the allowance account. Let's see how your book does it. So in X1, as I mentioned, we took that $89,000 in X1 and we broke it down into past due amounts and then that uncollectible percentage that we talked about previously, which gives us now, as we add it up, a $5,100 credit balance in the allowance. So if we're looking at the allowance for doubtful accounts or the allowance for bad debt or the allowance for uncollectible accounts, the ending balance in it now is going to be $5,100. How did we get that? That's based on the aging of accounts receivable. Based on aging, we now know that the ending balance in the allowance for doubtful account needs to be $5,100. Why is that important? Because once we determine what that ending balance needs to be, we then can require the adjusting entry to get us there. You got to know that ending balance first, and then it'll help you to do the adjusting entry to get you there. All right? Now let's look at this particular problem, and we'll walk our way through how the chapter kind of puts us there. So the first thing that the chapter says is that we're going to establish, because there was no write-offs, we're going to establish the allowance for doubtful accounts. So the journal entry in X1 would be a debit to bad debt expense for $5,100 and a credit to the allowance for $5,100. This journal entry gets us here. We will put a credit on the credit side for $5,100, and then we will have bad debt expense. If we did a T account, it would have a $5,100 debit balance in it based on that journal entry, once we posted that journal entry. And then the effect of this on the balance sheet will look like this, as we showed you previously. You're going to have accounts receivable at $89,000. You're going to reduce it by the amount of the allowance based on the aging account. And then you're going to show accounts receivable now at a net realizable value of $83,900. I'll say it again. You have your accounts receivable at the end of X1 of $89,000. You have a predetermined ending balance in the allowance based on the aging of that account receivable, and it gives us a net realizable value of $83,900. Remember, allowance for uncollectible accounts or the allowance for bad debt account is a contra asset. It's going to reduce the account receivable to what's called net realizable value. That's very important, because now we're going to look at the next year, which is X2. And here's where it gets very interesting. In X2, two things happen. The first thing happened is that we had some sales in X2 of $500,000, and we recorded that as a debit to accounts receivable and a credit to sales of $500,000. And then we had collections of $450,000, where we debited cash and credited accounts receivable for $450,000. That happened in the normal course of business. And then we wrote off $10,000. Under the allowance method, as I mentioned to you earlier, when you write it off, you go right to your allowance account and debit it, and you credit the account receivable. So in this problem, it was for $10,000. Let's go over here to the ledger account and see how that looks. We had in X1 in this particular problem a $5,100 credit based on establishing the allowance for aging in X1. Now in X2, we're going to debit it for $10,000 based on a write-off. And we're posting that here. We're writing off the account receivable for $10,000. This happened in X1, $5,100. We're writing it off in X2, $10,000. Now, what we have to do is another aging based on the accounts receivable balance at the end of X2. So this number we have here as our predetermined balance for aging that we did in X1, we now need to do a predetermined balance for aging at the end of X2. Let's look at it. As we look at this problem, we then take the $129,000 receivable balance. Where did I get that? I'm going to show you. We'll go back to the original problem. The original problem said it was $89,000 in accounts receivable in X1, and it went up to $129,000 in X2. We got to now take an aging of this 129 in X2 to get the predetermined ending balance in the allowance for bad debt account, which we're doing here. So in here, we now age it out. The 129 gets aged out based on our experience rate, and we see that the new balance in the allowance needs to be what? $11,100. Let's go back over here to our T account. So now, as of X2, this new required ending balance in the aging account, based on aging, in the allowance for doubtful accounts needs to be $11,100. We started out with $5,100 credit. We wrote off 10. We got to get to 11. I'm going to give you a moment, and then you can tell me, what do I need to do to get there? What do I need to do to get there? Because at this point, if I look at my difference, I have a $4,900 debit balance in the allowance. I have to get to an $11,100 credit balance from a $4,900 debit balance. This is how you do the allowance method under GAAP for accounts receivable in determining the amount that's going to be uncollectible. You post the write-off. This was the write-off. We started out with a beginning balance from year one. We wrote off $10,000 in year two. We predetermined based on aging 11.1, which is our ending balance. This is where we need to get to. This is the final number we need to see. How do we get from here to here? Easy math. You know now, to get to this credit of 11.1 from a debit of $4,900, I really need to add a credit now of $16,000. $16,000 needs to be my magic number to get there. Do the math. If I have a debit of 49 and I got to get to a credit of 11.1, I need a credit of $16,000, and that is going to be my adjusting entry to get my allowance account to reflect the aging that I predetermined. Let's look at how your book does it. Your book shows that the adjustment needs to be $16,000 to get us to where we need to be. This is how you do the allowance method. And the journal entry then would be a debit to bad debt expense of $16,000 and a credit to the allowance of $16,000. On the balance sheet, we would show the $129,000 at December X2, less the predetermined ending balance of 11.1 based on aging to give us a net realizable accounts receivable of 117.9. Before we do the direct write-off method, because we've been spending time on the allowance, I'm going to jump to a problem in your textbook or an exercise, and we're going to see how this works in a succinct fashion in just a moment.